Hello and welcome. I'm Steve Johnson from The Intelligent Investor, and I'm joined today by the two people now known as RHG requisitioners. On my left, I've got Jeff Wilson and I've got Carl Siegling from Cadence Asset Management. Most people know, Jeff, that you're Wilson Asset Management, the eponymous asset management company. Hello guys and welcome. Can you tell us why you're here?
I mean, the main reason we're here is a couple of weeks ago, we've been shareholders of RHG for quite a period of time, and a couple of weeks ago when the company came out with their EGM notice and they said they were going to delist the company, we just thought, that's just totally unacceptable. We're investors in listed companies. We want the companies to be listed so they can be transparent, we can see what the management's doing, and then, we were very concerned. And over that time...
So what was the signal that sent to you? And when John Kinghorn comes out and says, we've got this buyback in place, you can take the buyback, otherwise we're going to delist the company, what's the message that he's sending to the rest of the shareholders?
Well, we thought that he was holding a gun to all shareholders' heads. You either accept the buyback or you'll end up in an unlisted vehicle, that he will be, there'll be a non-independent board that effectively he'll control.
Okay, so Carl, what have you actually done? We were faced with this alternative here, take a buyback at 88 cents or own an unlisted non-dividend paying company. What's the alternative that you guys are putting forward for shareholders?
Well, I guess the alternative we're putting forward is once again a buyback at the same price that the RHG board have recommended, 88 cents plus a 30-cent franking credit. But in addition, we intend to keep the company listed on the stock exchange, and we also would like to have an independent and more transparent board. So we're proposing a new board for the business and maintaining a listing. I think the interesting thing about the listing as well is that we think over time people will be able to realise the full value of an RHG share by having the company listed. And I think the other component to that is, at least from our point of view, we've owned the stock at a time when it was potentially a riskier stock to own. We've seen the value of that stock increase, but we now think that the value moving forward will increase again, but with less risk. So the risk reward now is probably a better investment than it was.
And also, another thing is, they said that they're not going to pay any more dividends after this buyback. What we would like as shareholders, if there's surplus cash and franking credits, we want it paid back to us.
Yeah. Just to touch on that point that Carl made there, and we've talked about this a bit at The Intelligent Investor, 2 or 3 years ago, this business was a business where all of the value was in future runoff from the loan book. We're now in a situation where much of that value is cash or other assets on the balance sheet. The proportion that's future runoff is maybe 20-25% of the value, Carl. So we're in a situation where much more of the value now is locked in than was the case before.
The world's changed a lot since the global financial crisis of 2007. Obviously a lot of these assets were in huge financial stress during that period, and we're just starting to see the early signs of some types of recoveries in warehousing, in facilitation, and the improvement of the financial services industry in Australia. Potentially RHG could be well positioned to benefit from that.
So weighing up these two proposals, one's got a buyback, the other one's got a buyback that's almost at the same price, yet you guys are giving people an option to stay in a listed entity that's committed to paying out dividends with a board that's more representative of the wider shareholder base. You obviously think that that option is worth a lot to people if you want them to vote for your proposal.
Yeah, 100%. From our perspective, we think the board should be independent. The board should look at looking after shareholders. In terms of the buyback, we've done, our buyback will be on the same terms as their buyback, and that's just to treat all shareholders equally. Also, we want the company to have the ability to pay out additional cash and franking credits over time. And some people may want to accept the buyback because of the franking credits that are involved or their tax position. So that's why we're doing the buyback on the same terms.
Right, but presumably if there's a more attractive option there for people, you're going to end up with a lower percentage of the shareholder base takes this buyback than would have before with the coercive elements attached. I mean, I for one would have had to consider taking this buyback because I don't want to own an unlisted entity that John Kinghorn controls, whereas the idea of staying invested in this listed entity is much more attractive for me. So if you get a low percentage of the shareholders that take up this buyback, and you end up with a lot of cash still on the balance sheet, what's the sort of time frame or the ideal time frame from your perspective as a shareholder as to what happens with that cash and how it comes out in future?
I mean, being a shareholder, of course, you'd want it back as quickly as possible. In terms of what happens, that'll be a decision that the board will have to make. From my perspective, and I mean, I'm chairman of 3 listed investment companies, and what we try to do is give the franking back to shareholders as quickly as we can. There's no use us having franking in our hands, when the shareholders, they're the ones that
you don't earn interest on franking credits.
No,
they
get the benefit.
There,
yeah. So a lot of companies that we have shares in, we've been trying to put maximum pressure on them to give us the franking back.
And I think, Steve, there's a second component to that as well, and that is that our proposal does create an additional amount of flexibility. People can still accept the buyback, and then if they choose, if they over time decide that RHG potentially is worth more, even after the buyback, they can buy back into the company. So there's an opportunity for shareholders to accept the buyback and then buy back into a listed vehicle with a new transparent board and benefit from the future value that we believe will arise in RHG shares.
And Carl, how do you go about, you've obviously got a good idea for what you think this business is worth, how do you go about calculating that, and how accurate do you think the independent experts report was in its range of, I think it was 96 cents to $1.30 or so? Did they value it the way you would value it?
Well, it's really interesting, Steve. There's a 111-page document there, and then there's a whole lot of commentary out, and a lot of newspaper articles. There's a lot been written about the company, but in a really succinct way, there's a company with a whole lot of cash in the bank, about $1.22 of cash if you include the collateralized cash, and that cash is just increasing every day. Whilst we're sitting here, RHG is accumulating more cash, and that cash in the last half accumulated at 14 cents. So we've got a business here that is continuing to earn money. That doesn't seem to have been highlighted too much in the, at least in my view, in the 111-page document. The ongoing value of that book and the amount of cash that can be generated from that book doesn't appear to have been highlighted a lot.
And what about some of the risks that were raised by Mr. Kinghorn in terms of credit losses and the insurance business that they've taken onto their books? How likely do you think some of those things are to arise?
I think those risks exist in this business. Those are the risks that when you buy shares in RHG, you have to be cognizant of. What I would say is that compared to 2007, the point of maximum pessimism, the global financial crisis, those risks are to some extent reduced now compared to what they were back then. It may even be that inside the RHG business lies the seeds for a new business. The option to go back into business and to write new mortgages, or the option to do something strategically with another business or a distribution platform to actually get a business going. I mean, we're talking about a book here which still has about $5 billion in it. That is not an insignificant book in the Australian marketplace.
Jeff, I'm relatively new to this game, but some of this behaviour in terms of a listed company has really astonished me. Have you seen anything like this in your slightly more years in the investment management industry? I mean, the threat to delist a company that has 5,000 shareholders is...
I can't think of another company that's done that. Like, to me, it's quite an affront. As you said, you've got 5,000 shareholders, and to say to the shareholders, we all accept that it's in wind down, that we're going to take it off the board, and so we floated 4 or 5 years ago. You haven't had a good experience. We've got you some of the money back. Now we're going to delist it, and you can't see the shares trade, or you'll only get the information on a 6-monthly basis. I haven't seen that before. To me, it's very surprising behaviour.
Yeah, it is, and it was one line really in the chairman's letter cover to this very long and detailed report. There's one line in there that says we're going to delist it. By the way, just a small aside, they're going to be delisted.
It seems to be the companies, they'd like to use our capital during that risky phase from 2007 and 2010. Now that that's over and the waters are a bit smoother, we'll delist it now. It just doesn't seem that equitable, really.
Okay, now if people like your proposal and they think we'd prefer this situation to the situation that's currently in place, can you tell us exactly what they need to do for us to end up with the board that you're proposing and the platform that you're proposing?
Well, there's the first, the EGM notice that's already gone out. There's a vote on the 28th of April. So what they'd need to do is vote against that, and that's the buyback, and we're voting against that.
Now this is important because if this buyback goes ahead, then Mr. Kinghorn's going to own a larger percentage of the company than he already does.
Yes.
Is that correct?
Yes. And people might be confused. You can still vote against the buyback and you still have time to accept the buyback because the date for final acceptance isn't until, I think it's the 5th of May. So we'll be voting against that buyback, and then our EGM, which we called, we sent the paperwork into the company last Friday. That'll be held on the 8th of June, and so we'd be asking them to vote the 2 RHG directors off, or vote for everything on there. Well, that's voting the 2 RHG directors off and voting the 3 new, what we believe is independent directors on. Then soon after that, the new board would obviously work out what the strategies they want to adopt. But in terms of the buyback that our new board we're saying will undertake, then that would occur as soon as possible or practical after that. So it would probably be towards the end of July.
Okay, so there's a quite clear two-step process here. The first one is to vote down the original buyback. Now what you're saying is if that fails, if we fail to vote down that first buyback, people can still participate in it if they wish, because it's obvious that the risks will have gone up if that's the case.
Yes.
If that's successful, then there will be another meeting probably in early June where we need to get together again, try and get the shareholders to vote again and establish the new board. So it's a two-step process.
Yes.
I've had a number of our shareholders have rung up about this, and I think really the way I've tried to say it to them in layman's terms is there's very little downside in voting for our proposal, because even if it does fail, you still have the opportunity of accepting what I've loosely called the Kinghorn buyback.
Now, Mr. Kinghorn said that his family's not going to vote on that first buyback. So
not exactly. They've said they won't vote on it unless there's a substantial or significant change.
And it could be argued that this is a substantial.
This is a significant change. The fact that we're proposing a new board and voting against this buyback and proposing a new buyback.
Okay.
That might just be a little twist in there.
Yeah, and just on that, like since we've we've said that we're going to call this EGM, which was a week or so ago. I know Carl and ourselves, we've had a lot of calls, and a lot of the other institutional shareholders have rung us. A lot of high net worth individuals have got money in there, and they're all ropeable about what Kinghorn's been offering. So I actually think there'll be a lot of support.
Okay, so particularly for members of the Intelligent Investor, we've sort of been through this saga once and failed. Do you think there's more chance of success this time around? Obviously there is with you guys on board, but we still need a lot more votes to get to a point where you guys can achieve what you're putting forward.
Definitely, and it's up to each individual shareholder. They've got to do what they believe is in their best interests. But I've been surprised of how many calls or people that we've run into that have been very positive about what the proposal we've put forward.
I mean, it's very rare to see people actually sit down and write letters and send them in to you, showing that they're supporting your proposal, and we've had a number of those letters. Yeah.
Well, I do think there's a lot of demand out there in the market for minority shareholders to be represented, and this is a case of the Kinghorn family doesn't even control this company, right? They're acting like they own more than 50%.
And we really don't want to do this. It costs us money, and it's not in our interest. And I know when you had tried to get someone on the board of RHG a year ago, that's a significant cost to yourself, which with very little benefit. That was for everyone else to get the benefit, and that's what we're seeing here. But we're happy to do it because I think the question you asked before, like I've been in the securities industry for 31 years and I've never seen anything as audacious as this before in my life.
Okay, and one final question. What are the alternatives if this fails and people let's say we vote down the buyback, or even people are in a situation where this fails? Are there alternatives for us as a group of shareholders if we go down this path and we push hard for a reconstituted board and we fail at that? Are we going to be guaranteed to be left in an unlisted entity and Kinghorn controls it, or are there other avenues that you guys have thought about that we can pursue further down the track?
To me, the avenue we're pursuing at the moment is probably the lowest cost, even though it will cost something, and the most effective. But there are always other avenues. And to me, the Kinghorns, himself and his son, they own 23.5% of the company. You've got the rest of the shareholders, like 76.5%. If they want something to happen, then it will happen. So I've got enormous faith in those shareholders that they will come out and vote, and that we mightn't get the exact result that we want here. I believe we will. I wouldn't have been involved in this if I didn't believe that A was the right thing and B would be successful. But I'm pretty sure eventually we'll get the right result.
Okay, that's great. Thanks very much for your time, guys, and thank you for watching. If you have any questions for the guys, you can leave them on this website, rhgshareholders.com, or you can email them to us and I'll pass them on and do my best to get the guys to answer them. Once again, thanks, and just reiterating those key dates. That first meeting's on the 28th of April, so you need to have your paperwork in by then, and you'll find out lots more about the next one in the coming weeks. Thank you.
Thanks, Steve.
Thanks, Steve.